Good afternoon, everybody, and welcome. Welcome to our Spotlight on Financial Services Week. My name's Adrian Verdnick, and I'm the leader of Hall & Wilcox's Banking and Financial Services practice. Spotlight on Financial Services is a week of financial services seminars where we will be showcasing the expertise of our law practice in the field of financial services. As you would know, navigating the complex world of financial services can be a daunting task. The purpose of this week is to bring together a host of experienced people with expertise across a range of different issues in financial services law to provide insight and clarity. Throughout the week, we'll be hosting a variety of seminars covering a range of financial services topics, including finance law, investment management, insurance, M&A, and superannuation. Our seminars will feature in-depth discussions and practical advice on various legal issues that affect financial institutions and individuals alike. Over the last month, we've added to our program of events and secured an impressive lineup of panelists. So I would encourage everyone to revisit the schedule of events on the Hall & Wilcox website and sign up for any other sessions of interest. We hope you take the opportunity to meet some of our people and some of our clients and our colleagues and to broaden your networks. I've had the benefit across the 25 years practicing in financial services of being able to speak to and learn from and ask for help from many knowledgeable and collaborative people. We hope to give that back over the next 5 days. Finally, I would like to acknowledge the Wurundjeri people of the Kulin Nation as the traditional owners of the land upon which we meet today, and to pay my respects to their elders, past, present, and emerging. I think it's brilliant that we can meet on lands that have been cared for and managed by local Indigenous people for thousands of years to talk about cutting-edge financial services and technologies that are global, and in the case of blockchain, could be a universal application that is owned by us all. But for now, I'll introduce John Basilios, a partner in our banking financial services practice, who will lead this panel discussion. Thanks, John.
Thanks very much, Adrian. Welcome everyone, and thank you all for coming along today. For those of you who don't know me, my name is John Basilios. I'm a partner in the Hall & Wilcox financial services team. I also lead the FinTech and blockchain practice groups here at Hall & Wilcox. I'm also a director of Blockchain Australia, which is the peak industry body for blockchain in Australia. I would like to thank each of our panelists for making the time to join us today. And as you may have noted, Paul Stonham from the ASIC has been unable to join us today due to some family urgent commitments. I will start by asking each of our panelists to introduce themselves with their name, title, and organisation. But I'll come back to each of you to tell us a little bit more about your organisations after we've had the introductions. So I might start with Caroline, who's with us online today.
Hello, thank you so much for having me, and I hope you can hear me okay. I would love to be there in person. This is going to be a cracking panel. My name is Caroline Bowler. I'm CEO at BTC Markets. That's me.
Thanks, Caroline. And then we'll just move along, starting with Steve.
Short and sweet, Caroline. Steve Ballas, Blockchain APAC is one of the hats that I wear, and I try to make it my business to talk to every single person in this country who has an interest in this space. So that's generally my role.
It really does. I'm Lisa Wade. I'm CEO of DigitalX.
Ryan McCall, co-founder and CEO of ZeroCap, lifelong geek, and came into crypto very much from a technology angle, spending most of my career building a lot of software for the financial services industry.
Thank you, everyone. Caroline, tell us about BTC Markets and what BTC Markets is doing in this space.
Well, thanks for that. BTC Markets is one of Australia's longest standing cryptocurrency exchanges. We celebrate our 10th birthday early next month, which we're looking forward to. Based out of Melbourne, we've been servicing solely Australian clients over the past decade, and they've traded, I think, just a little over $23 billion in that time through our platform. We list about 25 and growing number of assets, but we purposely have a restricted pool of assets that we have on the platform. Rather than looking for the larger scale projects, we very much try to hone in on areas and projects where we see potential and development over the longer term within the blockchain economy. We hold an Australian financial services license through our sister company, BTC Markets Payments. And we're really excited about the opportunity here in Australia for cryptocurrency and for blockchain more broadly. And certainly to be a part of this group and part of this wider industry sector has been really engaging and really exciting for all of us. Certainly when you know that you're on the precipice of something really exciting for the economy and the country as a whole. So that's us at BTC. Handballing it now, back to Steve again.
Actually, before we come off here, can you tell us a little bit more about BTC Payments, I think you said, that has an AFSL, what it does with that AFSL and why you went out and got an AFSL?
Yeah, absolutely. So the AFSL process itself took us 17 months, which is quite a lengthy process. And I suspect that probably had a lot to do with ASIC quite rightly doing due diligence to ensure that, you know, companies that are involved in cryptocurrency have got something of a reputation, but to make sure that, you know, organizations such as ourselves are doing the right thing from a regulatory point of view. And obviously we are. So we originally at that point in time had a partnership with Vault Bank, the neobank that had been around for a number of years at that stage. And they were interested to look to move further into cryptocurrency. They could understand the opportunity that existed at the time, both in servicing the needs of businesses such as ourselves, but also for individuals who are looking to do more with the cryptocurrency, with the crypto economy and the blockchain economy. For those who aren't in crypto, it's quite hard to quantify the challenges that there are around the banking system. And I'm sure that's probably a topic that will be covered across the course of this week and no doubt in some depth, but it is really quite challenging to have sustainable banking relationships. And so this partnership was going to be something quite unique and quite exciting for Australia. So as part of that, we went out and obtained that the AFSL for non-cash payments and general advice. Unfortunately, just as we got out the other side of the AFSL process, unfortunately, COVID, I think, put claim to the fortunes of Vault Bank, and we weren't able to move forward with that specifically. However, we still retain the AFSL and certainly are interested in doing more with the opportunities that exist around it. And I think that's probably key, you know, a key point to make, not just about BTC markets, but about the industry more broadly. This perception out there that crypto is the Wild West, to use a hackneyed term, and that there aren't people in the industry here interested in building something with longevity and stability, something that's going to future-proof the Australian economy. I know both myself and the rest of the panelists are all involved in businesses in various different degrees that were coming at it to solve that exact issue and to really create something long-lasting through, you know, financial services regulation or whatever it happens to be. But certainly this perception that the industry is the Wild West is just simply not the case for Australian businesses.
Thank you very much, Caroline. I might go back in the opposite direction, starting with you, Ryan. If you could tell us a little bit about ZeroCap and what ZeroCap does, and particularly focusing on the financial services aspects of ZeroCap's business.
Sure. So we're primarily a trading firm and a custodian. In many ways, we're a service provider to the industry. We provide custody of digital assets for crypto fund managers, or we might be a liquidity provider to crypto exchanges. We also have a proprietary trading business as well. There is a regulated and unregulated side to business. So crypto is broadly an unregulated asset class here in Australia, but because we are an asset manager on funds and we also deal in derivatives and there are some other regulated activities. For that reason, we're a corporate authorised rep under an AFSL. So even though the underlying asset, crypto, is unregulated, of course, derivatives, it's a financial product, so we need to be regulated for that with ASIC. And we started the business in 2017, became a regulated entity in 2021. So we've been operating under that model for a couple of years now. So we're very involved in all the discussions around regulation, both locally and also abroad as well. So as a business, we've got clients in about 50 odd countries, predominantly on the wholesale and institutional end of the spectrum. So like banks, a couple of stock exchanges, hedge funds, wealth managers, family offices, high net worth individuals, all that sort of thing. Yeah.
Great, thank you. Lisa, tell us a bit about DigitalX and what you're doing in this space.
Yeah, so DigitalX is a very interesting little company. We're a micro cap listed on the Australian Stock Exchange, DCC AU, if you have Bloomberg. And we have been listed since 2013 and we're the first Australian, we are the first and only Australian company to hold Bitcoin on our balance sheet as a treasury asset. We used to be a Bitcoin miner and now we have pivoted that business into a funds management business, and we also innovate in the blockchain space. We own a reg tech tool called Drawbridge, which is a little trading tool for people who are employees of listed companies to not insider trade, and to monetize that we own a regulated business called Sell My Shares. So we sort of operate across the regulatory continuum. I did come from National Australia Bank, and so very conscious of regulations, and the way I would describe DigitalX is we play the regulatory advantage. So we understand regulation because we're listed. We understand funds management regulation because our team comes from a funds management background. The funds that we own are all registered Australian managed investment schemes. We operate under an Australian financial services license. And then in the Sell My Shares business, we're also a car for a retail license, but those businesses are quite separate. But one of the roles we do, I feel, play in the industry is sort of understanding this regulatory landscape. And I'd even go as far as, we were just talking earlier, Ryan and I was in Consensus, as was Steve, which is a big conference over in the US, and there's a lot of talk about regulation. And one of the commissioners of the CFTC pointed out that if you work in financial services, you're regulated no matter what. So I sort of think that these conversations are interesting, but we are all regulated, and we do say we play the regulatory advantage, but if we manage money, we're all regulated.
Steve, you've got a few hats. Maybe start off with Blockchain APAC and then tell us about the others as well.
Yeah, a few hats. Mine's a very different story to how to work with people to build companies and represent them. I found an interest in the space way back in 2017. And so I tend to follow where my interest in the conversation lies. I ran a blockchain event in 2018 for an enterprise sort of audience, because that's where momentum sort of was. At the time, I described the creeping fog of regulation, as I used to, and a lot of technologists were saying, no, it's okay, this fixes everything, everyone's going to get out of our way, and we're going to build these amazing things. And the creeping fog is no longer a creeping fog, it is a fog, it has descended, and people can't find their way through. And so I've kind of followed where I thought the interest was, and so we can move conversations in Australia, particularly forward. That led me to the role of CEO of Blockchain Australia for a couple of years, and I took what I viewed was a few little pieces of kindling, and gave some few people a match and then some kerosene and said, let's see if we can get some interest here. And there was for a period of time, and I've now watched that abate, and I think it's a byproduct of economic circumstances, it's a byproduct of global trends and the view of cryptocurrencies in the retail side. And it's also politically, we've got a relatively new government that has a lot of priorities. Digital assets isn't one of them, understandably, cost of living, supply chain, defence spending, very hard to make a case that digital assets is a priority. So I'm now following again what I think the subject matters thematically that will potentially keep Australia in this conversation look like. And for me, it's digital assets, digital custody, infrastructure providers, which is what I've taken on a little bit of a role to work with Ryan and Zero Cap. Stablecoins and CBDCs, retail and wholesale, thematically subject matters, and track and trace data, because nothing annoys people in this space more than being told everyone's a pornographer or a terrorist, and there is no value in these rooms. So I like to bring into the conversation data that reflects what people are building. So those subject matters are what's driving conversations for me at the moment, and I have the benefit of a little bit of work with Ryan and doing some stuff for a group called Scaffold Global, where I'm building out a digital assets thesis and running an event in July where I'm trying to bring together people who can speak with domain experience, many lawyers in those rooms, and hopefully sort of again reboot and kickstart the conversation.
Thanks, Steve. You mentioned CBDCs, so it seems as though it's a matter of when rather than if with respect to CBDCs. And a couple of our panelists are, I think, involved in some of the trials that are being conducted by the RBA, and might get you to talk about what you're doing there, Lisa and Ryan.
Yeah, so my background from National Australia Bank, we co-created the project ASIC, which was the precursor to the current central bank digital currency project, which is going on through the Digital Finance Research Corporation, of which we're a member. And we are testing with some of the organisations that are developing the CBDC, or as they're calling it, EAUD, because there's a big difference between the project ASIC project, which was more programmable than the EAUD. And I think the purpose of the current project is to really find use cases, because I famously worked for the bank where our CTO said blockchain is a hammer looking for a nail, and you can imagine how much I love that. And freely I can speak about that now, but I think really what the Reserve Bank of Australia needs is for business and industry to step up and find use cases that are going to help real Australians. Interestingly, I did a panel for them in Western Australia, and one of the large mining corporations was present, and what the question was, we are selling large shipments of goods to China. What happens if they turn around and ask us to pay in digital, that they will only pay us in digital yuan or renminbi? I hate saying that word, don't we all? And how will Australia be placed? And so that really is the type of work that we need to do now. And the use case we'll be putting forward, working with a company called Canvas, which is a layer 2 developer, for want of a less geeky term. We have on our balance sheet as a corporate, we are starting to play around with what we call real world asset tokens, and to develop use cases and give people examples that are concrete and understandable. Off our balance sheet, we've funded 3 deposits for real Australians to close the gap for them to be able to buy a house with a company called Bricklet. And what we'll be doing is testing trades with Bricklet and EAUD and Canvas, which I believe will use the ANZ, but that's open to tweaking, so that we can demonstrate real use cases. And I can't think of a better use case than helping Australians buy homes in the current climate, because there's so many young people locked out.
Thanks, Lisa. Ryan?
Yeah, so just taking a quick step back for a moment. So the Reserve Bank of Australia is running this pilot program. It's supposed to be for 4 or so months. I think it's going to end up being a lot longer than that, in collaboration with the Digital Finance Collaborative Research Centre. And as Lisa said, the idea is to explore use cases for a CBDC. It's not so much about does the technology work, because we pretty much already know that, right? It's about, is there actually a genuine need for a central bank digital currency to exist? Particularly in the context, here in Australia, where we've got 2 banks that have already released stablecoins, which is ANZ Bank and NAB, and others will follow. So there is about 20 odd institutions that are participating in this pilot. You've got the big 4 banks, ASIC, I think Visa, MasterCard, DigitalX, ZeroCap, and there's a handful of others. Our role in, I think there's about 15 odd use cases that have been selected. So they actually opened an invitation for people to submit, the industry to submit use cases. There were about 150 and 15 odd got selected. 3 of those were involved in, and our role in those is basically, again, as an infrastructure provider, essentially as a market maker on the Reserve Bank's CBDC, or as a custodian for the digital assets that are actually being transacted. So there's a couple of charity use cases. There's one that's like a marketplace for early payment of invoices. And what's interesting about the pilot actually is that the EAD that's issued, it's actually a real claim on the Reserve Bank. It's not just pretend money, which is, I think, really important and interesting for the pilot. So that's how we're actually able to make a market on it, because we know that the RBA will be good for it. And yeah, so we're about, I think where we're at in the pilot now, there was a demo day a couple of weeks ago where a lot of the participants were presenting where they're at on their use cases. At the moment, it's pretty much all on testnet. I think in a week or two's time, we're doing the same thing, but this will all be on mainnet.
Excellent, thank you. We've got a couple of people in the audience which I've given a heads up on that I'm going to pick on. because we've been told about all of these interesting things that everyone's doing up here on stage, but I might pick up on a couple of people and get them to tell us what they're doing in this space as well.
Starting with Peter Cook from Novati. Thank you, John. We've launched a stable coin on the to be a multi-chain stable coin. So initially commercial on Stellar and then shortly Ether and Ripple. Most of the use cases that we've looked at, and I think use cases are the real driver, have been towards cross-border payments, onboarding and offboarding from, say, other exchanges, so selling out of Bitcoin and rather than say going back to fiat, going to stablecoin, quicker cross-border settlement to try and compete with elements of, say, SWIFT or other networks. I don't know about the creeping frog, Steve. As someone who'd never really dealt in an inclusive way with regulators, I've found it a feeding frenzy. But and in fact, then you find out how many regulators there actually are in Australia when they start phoning up asking for briefs. And just on the CBDC trial, I think actually we're with Zero Hedge doing a sort of sample cross-border payment thing. And I think for me the beautiful thing about stablecoins is that it can go down into very commercial, let's call it limited or maybe niche use cases that a CBDC in its first 5 or 10 years of operation is not even going to really bother thinking about. So we would see that we're sort of an interface long-term CBDC out to the real world in terms of just getting that digital dollar moving.
Yeah, that's one thing I think is really important to think about is it's not CBDCs v stablecoins. That very much there are use cases for both. And in fact, we break it into 4 quadrants, which is wholesale retail. So wholesale CBDC, retail CBDC, wholesale stable and retail stable, because there are use cases for all. They all have different characteristics because of the way the technology works. And those characteristics are suitable for different use cases. So I think it's really important not to think one or the other. We actually need all of them for the infrastructure to be able to transact in these new financial rails. And really where Zero Cap is sitting, the most important thing in this conversation is in fact the market making, because that's the piece that we all need.
Thank you. Next up, we've got Lee from Symbol.
Thanks. My name's Lee. I'm the Chief Recycling Officer and founder of Symbol. We have got something really different. We're a recycling technology startup with a blockchain base. We're helping consumers, all of us that recycle, and helping us deal with the problem that we find recycling confusing. Have you imagined, standing in your kitchen at home, piece of rubbish in your hand and not know what bin to put it in? Reading the label and be confused by that. We're sort of dealing with that problem. And we're helping out our customers, which are companies that put things into packaging, to deal with their sustainability issues. So the way we do that is we provide a QR code to put on product labels and replace barcodes. Or if it's like a McDonald's, just put the QR code on the packaging. Then when you scan that QR code with your phone, and then our app tells you what bin to put rubbish in. And then you scan another little QR code that you put on your bin, and you get a cryptocurrency reward. So that's what we're doing. So we're enabling ESG, helping companies be more sustainable and let their products communicate with customers and have a good interaction, brand affinity at the bin, and also just help us recycle a little bit more and get paid for it.
John, can I just build on the conversation that Lisa started before? One of the challenges with this space generally is people conflate everything that Lisa just described. There's not huge energy ever that's come out of the RBA with respect to retail CBDC, but most of the noise and the energy is around that conversation. So people become fixated about what a retail CBDC might look like, when the truth is, on record, the RBA has said there's not a strong use case for a retail CBDC. And the conversation is largely wholesale. For me, it's interesting to see the stablecoin piece in the middle, because when you look at the way the regulatory landscapes are being built out internationally, we lag as far as conversations with respect to stablecoins in Australia. The UK, MiCA and the US are talking actively about participating in this and coming out with some regulation. That's a conversation that's been largely absent here at home. So very hard to, as soon as you jump on LinkedIn, make any comment about this subject matter. People are quick to tell you that everything you're saying is bad because they've clearly got a view. So really important to sort of zoom out and say, who are we talking about? What use case? Who's saying it? Is it a narrative or the reality? So a lot of complexity in this topic.
I can't imagine you would get beaten up on LinkedIn.
I'm
social media platform.
Okay, going into the guts of our presentation today. So there have been various failings in the industry, including high-profile collapse of FTX, and that's forced regulators and politicians alike to take note and expedite enforcement and regulatory change. Binance, which is one of the biggest exchanges in the world, the CFTC in the US has filed civil enforcement action against Binance with numerous violations of the Commodities Exchange Act. The complaint charges that Binance entities operate a centralised exchange through an intentionally opaque common enterprise, and that they chose to knowingly disregard applicable provisions of the Commodities Exchange Act while engaging in calculated strategy of regulatory arbitrage to their commercial benefit. In response to that, Binance says that it has geo-blocked US users. So it'll be interesting to see what the outcome of that is, given that Binance says that it doesn't provide its services to US citizens. In addition, in Australia, Binance has handed in its Australian financial services license because they were servicing retail clients in circumstances where they should have only been servicing wholesale clients. And the response to that was that it just wasn't worth keeping that because they only had 500 derivatives clients as opposed to 1 million traditional crypto clients. Moving on from that, the SEC has issued a Wells notice against Coinbase, saying that it's made a preliminary determination to recommend that the SEC file an enforcement action against Coinbase, alleging violations of federal securities laws, including the Securities Exchange Act. Coinbase issued proceedings against the SEC for not providing it certain guidance that they were seeking in relation to how the SEC would apply the Securities Act and Securities Exchange Act to digital assets. And the US court last week has required the SEC to respond to that complaint within 10 days to provide clarity on how it will apply securities laws to digital assets. Late last year, the Australian Securities Investments Commission issued proceedings against a number of Australian entities, including Block Earner, Findex and Coin. Block Earner and Findex in relation to their own products and Coin for misleading and deceptive conduct. In February, we had a token mapping consultation released by Treasury. We also had the Treasurer announce that Australian regulators are strengthening their focus on crypto assets and crypto asset service providers to make sure they meet their obligations to Australian consumers. And that ASIC was increasing the size of its crypto team and it's upping its enforcement measures, and that the regulator will take legal action where it identifies crypto offerings being marketed without appropriate credit or financial services license. And there was also an announcement by the Treasurer in February that there'll be a consultation released mid this year, although I understand that that is now delayed in relation to licensing of exchanges and custody service providers. So I might start with you, Caroline, because I know that you're a big advocate of exchanges being regulated. Can you maybe give us some of the thoughts based on the backdrop that I've just provided, together with specifically the proposal for licensing of exchanges and custody providers?
Yeah, thanks, John. To explain my thinking, I used to work in traditional finance. I worked through the GFC on the trading floor of a US investment bank. I had first-hand experience of what happens when things go awry, even within regulated entities. And the part that scared me the most wasn't necessarily about institutions inflicting damage on one another. It was the damage they inflicted on everybody else that was the issue. So when I talk about regulation of cryptocurrency exchanges, I'm not necessarily looking at it thinking that the exchanges themselves need to be minded for themselves. It's more about the protection of Australian crypto investors. It also suits me It suits me that we're regulated because that creates an environment, an appropriate environment of trust. And Australians need to be able to trust the entities that they use to engage in the crypto economy. It's all very new, and we're all still, every day is a new adventure in this sector. But we need to create an environment where people know that they can come in and they can trust the counterparties that they're dealing with. And I think an appropriate regulatory regime like we've seen come out of Europe will be only beneficial for Australians who are engaging. And the horse is bolted. This idea that somehow we can regulate out of existence didn't work for the US with prohibition, and it's not going to work now in Australia or anywhere else. But instead, I think it's about becoming very realistic about the protections that need to be put in place. So that's the background to our decisions around regulation. When I think about the process here in Australia and how it's unfurled over the last 2 years, really, I suppose, in particular, we've obviously had a change of government in that period of time as well, and those naturally create delays and issues. What hasn't really changed over the last 2 years is the gathering sense of momentum and engagement, both within the industry itself and also within the body politic here in Australia. And if anything, we've seen a maturing of that conversation, perhaps both from both sides, both from the industry and from a regulatory point of view. Does it help us that we're seeing such disparate notices coming out from, say, what the US are doing, what parts of Asia Pacific are doing, what the Europeans are doing? It doesn't necessarily help in the sense of you're looking for something more cohesive. But what it does do is create a real opportunity for Australia to capitalize on this window of time. If we can learn the lessons of what we've seen from the European Union, if 26 of those countries can come together and figure out a game plan, we can do the same here in Australia. And I think if we can capitalize then on our position, both regionally and internationally, to the wider markets, and really, back ourselves in what we're doing. There are some excellently well-run businesses in Australia that are engaged in this sector. And we can really center those in what we're doing from a regulatory point of view, but also then, if we're looking to really assert ourselves internationally. Financial services contributes, is it about 20-25% of GDP to Australia? Cryptocurrencies are going to be part of that. It would be a crying shame if we, for the lack of sitting on our hands, didn't, capitalize on that opportunity, for the next 5, 7, 10 years, then who knows where the economy is going to go thereafter. And I think what's also really interesting, just as we're talking about technology and the different uses of technology, one of the conversations here in Australia, it almost seems to be quite siloed in how we talk about tech, that one's a quantum conversation, one's an AI conversation, one's a blockchain conversation, and ne'er the twain shall meet. And personally, from the view that where we're sitting at right now, governance is a consistent theme across all of those different technology sectors, all those different types of technology. And I feel that that's the conversation that we need to move to further mature and come together, is how are we going to provide proper governance as a country over each of those technologies, and how we're going to work together collaboratively, because that's absolutely the future that we're all working towards. I appreciate I may have taken it slightly off the topic of regulation of cryptocurrency exchanges, but you know what I get when I have a soapbox, John. Off I go.
No, that's great. Thank you. Really appreciate it. Ryan, do you have any thoughts on that?
Yeah, look, I guess both Steve and Carolyn have touched on this. I've been spending a bit of time abroad lately. As I mentioned earlier, we've got clients in 50 odd countries around the world, and we opened an office in London last year, and we're sort of looking at our next move internationally. So we're just seeing what's out there and getting on the ground. So I've spoken with a lot of the regulators outside Australia, and there's a couple of zones in particular that are looking pretty hot, and Australia is really lagging. And I guess just the temperature of the conversation is a lot different as well. Like particularly, I look at Hong Kong and Dubai, or UAE, just generally, and it's actually quite interesting just to reflect as well. You look at the US and you look at the CFTC and the SEC that are basically arguing over which regulator should have authority over the asset class. Whereas you go to Hong Kong, and I met with the SFC and HKMA recently, and HKMA is saying, well, this isn't a commodity, and the SFC is saying, well, it isn't a security. So it's the opposite, actually. But Hong Kong is very welcoming to digital asset businesses, and their regulation is evolving quite quickly. But all the sort of noises that you're getting from the regulators and government, it's all the right sort of thing. Like they really see it as an opportunity to contribute to the economy and really be a leader in the space. Dubai is similar. They've actually set up a virtual assets regulator. So rather than expanding the scope of one of the existing regulators or trying to fit crypto into one of those existing regulatory frameworks, they've set up something completely different altogether, which is a really interesting way to go about it. And that's very good as well. I think the thing that businesses like ours really like about that is clarity, right? So it doesn't necessarily matter whether you agree or disagree with the rules. At least you know what the rules are, and then you can choose to play by those rules or not, right? And that's something that we're really lacking here in Australia at the moment.
Misha, do you have any thoughts on the regulatory piece?
So many, just so we're not all agreeing with each other and the same team. There's two things from being in the US last week. Sitting next to Steve on the staff, I'm so sorry if you wanted to say this. Firstly, I mentioned the commissioner from the CFTC. And from my point of view, I'll just reiterate, we're already regulated because everything's a commodity. And then the second thing I would say is what we're seeing is global regions competing to be the hub for this space. And we've already missed the boat because Hong Kong and Japan are actually going toe to toe, and we don't even realize it. So while we're sitting here talking, wondering about how we should be regulated, business leaders in our community are having to look offshore to make decisions because you can't invest in businesses unless you have that certainty. So from my point of view, what do I need to do? I need to think about how do I operate in Hong Kong? Do I go to the UAE and get licensed there because I have no certainty here? Yes, we're regulated. However, if there's ambiguity, we can't launch new products. We can't do lots of things. So I think that, we really need to be not wondering whether this is, I think Caroline said it before, this industry is not going away. And we're not talking about crypto, we're talking about financial rails. We're talking about companies to transact financially. We're talking about mining companies in Perth. It's not just about crypto.
I have a slightly different perspective, and I'm here. This isn't meant to be tough love. This is just the reality of the situation we find ourselves. No one cares if Australia misses out on this opportunity. We're kidding ourselves with the humans noticing what we're doing. It's either an opportunity that we take or we miss out on. And I think we tell ourselves stories about Australia as fast. We're a fast follower. And my joke is, if you follow people who are slow, you're not a fast follower. You're just following people who are slower than people who are moving quickly. And the challenge at the moment out of the US and the conversation I'm having across the region as well is just don't pop up enough. I said we just don't rate a mention, and that's related to this side as well, which is the regulatory uncertainty. But it's also the case now that if you talk to the lawyers, and I've chatted to many lawyers, I've surrounded myself I'm encased in lawyers. For the first time ever, lawyers are telling people Australia's probably not the place you want to domicile your business, almost exclusively, and that hasn't been the case. So this isn't the sky's falling. We're just not the go-to. It's not, should we do it in Australia? The conversation now, in my experience with many lawyers, is they're telling their clients it should be somewhere other than Australia. That's a bad step for us. And so the thing that I heard a lot in the US, the language which was capital formation. There is no capital formation if people are unwilling to domicile their businesses in Australia. That's the reality we face in the next 6, 12 and 18 months. And it's up to us to sort of chase it down, or, and this is what I say to most smart business people that I know, maybe you should go somewhere else. And that's the reality of the conversation at the moment in Australia.
Sorry, if I may jump in on that. As an Australian business, 10 years in Australia, generally our staff are all Australian, our clients are all Australian. The IP that we generate working with this new cutting edge technology, all Australian. And if I can't get the regulatory clarity that Lisa's spoken about, that we're all talking about, what do we do as a business? And where can we go with it? And I'm going to be forced to go overseas. And then the question also becomes, well, who's going to protect the Australian investors in this, like the regular mom and dad retail investors, if we've all got to go overseas? It's farcical. So Jerry, just from the point of view, it's going to be quite irate as I sit here, but yes, in support of what Steve and Lisa are saying.
Yeah, and I think the conversation isn't that people are going to jurisdictions where there is no regulation, but rather it's more fit for purpose, specific tailored regulation.
When have you ever heard that before in the history of mankind? We're flying to regulation because you need it to be able to invest.
Yeah,
100%.
Yeah, Steve. So I think you've had a lot of conversations with a lot of people. What's your sense of, where you kind of alluded to it in your previous answer, but what's your sense of where we sit in the regulatory discussion and attractiveness or otherwise with respect to the direction we're going in?
Part of the reason I went to the US first and heading to Singapore shortly, then to Europe, is just to sort of test the temperature. And the temperature was, no one knew largely what was happening across Asia Pacific. And if they did, they were from Singapore. And so Australia didn't get into that conversation, nor did New Zealand. As this sort of outpost of the world, we didn't really mention. People were interested insofar as we play a part in the regulatory framework and sort of the tapestry that is, global ambitions of businesses. But that was kind of where it started and ended. There's more interest in APAC about what's happening in Australia. The irony for us is the well-established regulatory frameworks here give confidence to people that can set up businesses. We're a high sort of benchmark here. So we need to play to those strengths, and we're retreating from those strengths. As an industry says we want to move towards regulation, and we're not going, can you regulate us more? Can you provide more clarity? That's Australia's export strength. In the same way as we export education into the region, we export that certainty. And a lot of established regulatory sort of approaches. That's our value prop, and we're not leaning in on that. And I think the reality of the UK and MICA is a hulking beast. It's funny that no one talked about any particular country. People talk about MICA, or MICA. But they don't say Germany, and they don't say Italy, and they just say MICA. It's just a framework. Like it's a bit amorphous in the way they're talking about it. When I spoke to people about the UK says we feel the pressure of MICA, and we also feel the pressure of the US. So there's shifting sands there, but we don't get caught up in that slipstream in a positive way. We just get forgotten. So that's kind of the sense for me at the moment.
But even in the UK, which you mentioned, I think they're also providing greater certainty, I guess, by having a regulatory perimeter, which we actually don't have here, which makes it even worse. And even the UK is more attractive than Australia, isn't it?
They're giving the impression, at least, that they're willing to take on meatier subject matters. I think the Law Reform Commission released a 498-page document, I think it was, which even all the lawyers I know couldn't be bothered getting through. But it talked about the property right, what this entails, what a digital asset entails. That's a lot of heavy lifting that they're asking people to give consideration to, and that's just one element. And so that's one of the signals. It's not quickly change the law so that everyone will flood in. What we're saying is, are we willing to have dense conversations? And sort of echoing what Caroline said before, conversations are still siloed. The ACCC talks about scams but doesn't talk to the industry. ASIC talks about scams but doesn't talk to the industry. Treasury talks about scams, talks to ASIC and talks to the ACCC, but don't talk to the industry. So we have this dilemma, which is there's such a fear that if you walk in the room, everyone's ready to pot each other. It's the exact opposite. I've never been in a room where I felt uncomfortable as people just want to talk about the subject matter. And those opportunities are still absent a few years later.
So this is probably a question to all the panelists. What do you think that we in Australia can do to make us, I guess, provide greater certainty and make us an attractive place for people to do business?
Well, I'll go first then. I just think that fraud is fraud, and protecting consumers is protecting consumers. That's already regulated. And I think that upstanding Australian businesses can build upstanding businesses so that people have a flight to quality, and if they are curious, they can participate and feel safe. And I think the Binance product is probably a really good example of, it's a very grey area, because what they got pinged for was in fact something that every financial institution actually does, because I've had a stand-up argument with somebody about it, because it's differentiating between a sophisticated investor and a professional investor. And actually nearly every traditional fund in Australia does the same thing and makes the same mistake. So I think we need a level playing field for everybody. And not that I think Binance did the right thing. What I'm pointing out is that not everybody's doing the same thing. So I think that we need a level playing field, and I think upstanding business people need to create upstanding businesses so that we can all participate and get curious, because we are lagging. The statistics, Australia's not even in the top 40 crypto countries in the world. So, these are financial rails, I'll say it again, that every business will need to use.
Yeah, look, I think one of the challenges that we've got is there's just not a lot of experience within government, Treasury, the regulators that are the ones that are kind of leading the charge here on the policy development, I guess. You know, you've got to think, if you know anything about blockchain, whether it's the technology or the financial aspect or the trading aspect, liquidity, custody, whatever it is, you probably don't want to go work for a regulator, right? Or Treasury. You want to come work at a crypto business. So I think they are lacking just a lot of knowledge and experience. And really the only way to solve that is more consultation with the industry. We get it in very limited doses, I guess, like the Token Mapping Consultation Paper that you mentioned. You know, there are these papers from time to time where the industry is actually asked what they think about various regulatory questions and whatnot, but they're few and far between. And you know, we haven't even really seen the results of what those consultations are yet. So over the last couple of years, there's sort of been, you know, a plan to make a plan, and we don't know what the plan looks like yet. We've just consulted on the plan to make a plan, right? So Australia's pretty slow in this regard, but to be honest, I'd probably rather take it slow and get it right than rush it and get it wrong. Like, it'd be pretty hard to walk it back, I think, if we got some bad regulation in place.
And adding kind of at the supranational level, one of the things that I've been trying to tell people in the rooms is, whilst we're kind of talking about it, and I'm trying, moving slowly is fine, as long as you're moving. That's kind of the critical part. But it's an acronym soup. Like right now, if you pay attention to what's happening from a regulatory perspective around the world, the Financial Stability Board, IOSCO, the Bank of International Settlements, Financial Action Task Force, the IMF, all of these organisations are putting their flags in the sand and saying, we are keen to play a part in this. They're all marking their territory. And these are organisations that have global influence. And I think everyone's sort of recognising that right now between the end of the year, all of those organisations are putting out meaningful guidance with respect to this. You're going to go, so if you don't make a statement in relation to this thing, you are beholden to all of these conversations, because they are deliberately moving into this space and saying, this is what our respective cohort, our stakeholders, at a supranational, this is what the big group is talking about. So what are we talking about? So for those who don't believe this is a thing, which is always interesting for me, for those, particularly those in traditional finance, kind of go, this is all they're talking about. All the organisations that regulate and drive financial service around the world have made it very clear that this is the future of finance as far as they're concerned. The tokenisation of real-world assets, the fractionalisation of real-world assets, cross-border payment, they're all talking about it. So the question for us is, are we so far away from this conversation? We just don't recognise how much of that's being activated at a sort of a global level, not a regional level, at a global level.
Another thing that we're lacking really just generally in the industry is funding, even just from like a private equity venture capital perspective. It's a tough market at the moment, right? Like really the last year and a half, it's been a difficult environment for businesses to raise capital. But especially for crypto businesses in this market, like we're in a prolonged bear market and it's a tough environment to begin with. But really there is absolutely no government support whatsoever. So I think, you know, a bit of that would be really helpful to attracting more talent into the industry to help drive the industry forward. And something that we always get onto in just about every one of these panels that we ever do is like everything in the industry is an uphill battle, like from, you know, banking through to the regulatory side, right? So I think there needs to be, and there is, I suppose, recognition that, you know, service providers such as banks really need to get on board with supporting the industry, because it just feels like a very adversarial environment. Everything is an uphill battle. So yeah, we need some more support on that side.
This is a question for each of you. Why do you think this is an important space that people should be paying attention to, and why is it relevant to financial services?
I mean, generally, this is just data packets moving across the world. When you really simplify what we're talking about information moving, we're talking about value moving. That's the internet. That is money. That is any determination of what digital value looks like. It's not removed from, people keep looking for the blockchain thing. You know, for 6 years, I've been saying, people go, yeah, but where's the blockchain thing? You know, where's the blockchain department? Where's the blockchain education? Blockchain, you go, it's data, it's privacy, it's the assessment of what is or isn't digital value. It's all those things. It's a sort of this crisscross, you know, and then AI pops up and everyone loses their mind about generative AI and AI generally. Again, AI is just data packets as well. It's just creating more information, sending it around the world. These are not, as you know, echoing Caroline's point again, they're not separate You know, we're talking about, well, what's the mechanism whereby we can prove that an AI-generated bit of data is really going to find out what the blockchain? You know, these are intersecting conversations where people just don't see them, John. So for mine, it is a base layer conversation, but people think it's a high-level conversation with a particular use case. And I think organisations like consulting firms struggle because they say we need to convince the partnership about a product that's a use case. Like you said, there's only one use case, and if we can get that across the line, then they'll start paying attention. It's the wrong way to look at this. It's how is this baked into your business? And people don't often give it that kind of consideration.
I know you like talking about tokenization. Yeah, I mean, I can just say, I guess, from some of the conversations that we're close to as a business, with the banks in particular, the way that they are looking at this is very much on the technology side, and how can this drive efficiency, create new products, reach new markets, and tokenization is really the thing that unlocks all of that. So that is taking an otherwise like hard asset or real asset or off-chain asset and actually moving it onto the blockchain, potentially fractionalizing it, increasing liquidity. So say you've got a commercial property or something like that, something that's pretty difficult to move or sell, right? If you can put that on chain and fractionalize it, suddenly now you have a much more liquid asset. Like these are and cross-border, everyone's spoken about, right? Even the tokenization of money, right? That's basically what a stablecoin is. And these are the sorts of use cases that banks are looking at. And it's relatively small. In fact, it's tiny in the scheme of all the things that a bank actually thinks about. You've got, you know, a small team within each of these institutions that's thinking about how can we actually utilize the technology, but they've got to get sponsorship from an executive manager and convince the board and get more funding and do that in an environment where the industry has, you know, been really torching itself from collapses like FTX and other exchange blow-ups and businesses going into administration. The lack of regulatory clarity and all that sort of thing, that doesn't help the banks either. I know that's one thing that's really preventing them from getting into the asset class or the technology proper. You know, so I think we're probably at least a year, maybe two away from having more clarity around that here in Australia. But I think that will really make a material difference once these major financial institutions are actually participating in the industry proper. Because at the moment, it's all kind of R&D, proof of concept. None of it is really material, but we'll get there.
Yeah, and as if I just put my funds management hat on for a second, so I'm not repeating, and I don't know what Caroline's going to say, but I'm pretty sure that this won't be it. Why is it so important? Citigroup wrote a paper in 2018, which is being actualised now, which is inside of funds management. It's a financial revolution. When we talk about financial rails, we're talking about the natural evolution of cheaper, smarter, faster. When we're talking about funds management and investment management, and I think everybody in this room has a superannuation fund, so this is where the rubber hits the road for everybody, is the way that you can change portfolio construction, getting super geeky at the asset level for the real world assets that Ryan is talking about. That completely transforms how you can construct a portfolio and therefore changes the risk of the portfolio to the advantage of each and every individual. Whereas previously that advantage is taken by other actors in the value chain, and that advantage can come back to all of us. Then if you want to go super, 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 super geek, the thing that I'm obsessed with at the moment is our current all of the financial products that we price sit off reserve banks and central bank governed interest rates globally, which we call the risk-free rate of return. I won't go too far into it, but actually when you look at the yields that you can get from things like providing the financial infrastructure, such as the ETH staking rate, if you call that the crypto risk-free rate of return, we start to be able to price finance on the utility, not on the politics. And that to me is super interesting. And I'll leave it right there because I don't want to get too far into it, but it's important, and they're the financial rails of the future. And as people who have investment portfolios, it can be to our advantage, and we'll get greater returns from it.
Before you go, Lisa, I know that I was there with you at Consensus, and you were very interested in the stuff that Franklin Templeton is doing in the space. Can you maybe just tell us a little bit about what Franklin Templeton is doing
Yeah, so we did it first, but, but they're really big and really important. And it's always better hearing it from someone really big and really important. So there's a new technology, I'll just say ERC 4626 contract, whatever, but you can actually house a fund inside a token. And that basically means that you have completely transparent financial instrument, which you can see the returns, you don't have to pay all the back office costs. And Franklin Templeton have launched a money market account called Benji. Now that can be any financial product, any portfolio, that's just the launch of it. What this means for you is that you won't have to pay all of the service layer fees for all of these financial products that traditionally we've all had to pay. Plus there's the transparency of the underlying portfolio. So you'll be able to see every movement that happens inside the asset that you own and have this new level of transparency that has never before been offered to the market. And really, why is this important? It lowers fees and it actually enables investors to understand the risks on a whole different level. And the other people that were there were Fidelity, and we were just talking about it before. Not only did Templeton sort of talk about this new way of creating funds and this new access to investment, I should have mentioned, because it's easier to access these products. You have a digital wallet through Caroline, you hit a button and you can buy the Franklin Templeton fund, complete game changer. Fidelity had 49 people there across all divisions of their organisations. What Ryan was saying, inside of our domestic banks, we have pockets of people working in silos, fighting the machine to get recognised and get things built. At Fidelity, that is sitting end to end across their entire organisation.
Thank you for that. Just going back to Caroline in relation to the previous question.
Yeah, I'm disappointed, Lisa, because I was also going to talk about that 2018 Citigroup paper, but you gazumped me on that one. When I come back to you, the original question was, you know, why am I in this industry and what excites me about it? In the late 1990s, when I first went to university, myself and my friends, I was doing a Bachelor of Arts, my friends were all comp sci and applied maths, and we broke into the postgraduate technology lounge. And I managed to see for the first time Skype, the first iteration of Skype as it was being done kind of in this laboratory. And I can remember being so excited thinking, oh my God, I've seen the future. This is unbelievable. This is like something out of the movies. And I think working in blockchain technology and in technology in general, you get to live that every day. Like you live every day in the future. You get to see, you get to see, you know, over the shoulder of other people and see what's coming. So I think that's probably why everybody in this panel and in our industry is so animated, because we have seen the future and we get to see and live in it every day. And we're trying to call out to people so everybody else can come and join what's to come. I know that the media the media's job is to sell media space, and bad news sells more than good. And I think that what's happened with cryptocurrency and blockchain is that the bad stories have just been self-perpetuating and have taken all the profile. And the good news doesn't sell as broadly. But when you're in the industry, it's almost schizophrenic, because you get to see and hear all these great stories about tokenization, and obviously Franklin Templeton have switched on to it, Fidelity, etc. Like they see and know the future. But right now, everybody else is being distracted by all the noise and the quick stories that can sell in the media. And I think it's beholden on us. You talk about what can the industry do. It's beholden on us to continue to spotlight and profile the good work that we're all doing in the industry, or that the good actors are doing in the industry. And I think that's probably quite true for Australia, through Blockchain Australia and others. We like to collaborate with one another in the sense of support one another's really good achievements. And I think that's probably what makes the Australian blockchain space such a lovely environment to be in. Still competitive, don't get me wrong. We all still want to win and be first out the gate. Don't misconstrue that. But the fact that more than anything, it's a sense of collaboration, a sense that we all have seen that future and we're all pushing together towards it. And as I say, in a couple of years' time, this is going to be so commonplace and so standard a conversation. It's not even going to warrant. It'll be another new technology that they'll all be banging on about instead. But for now, yeah, I just get to see the future every day. It's fantastic.
John, there's just one other thing, just coming back to your question, just to make a very quick point. Paul Simon from ASX is going to be on the panel here, right? And the reason that you have someone from ASX on the panel is because they're thinking about tokenization as well, right? And I don't want to put words in Paul's mouth, but essentially they're looking to become a marketplace for trading all these tokenized assets that they're talking about. So in terms of why people should care about this, like just have a look at the participants in the industry and kind of who's coming. It's big.
Yeah, I could add that, both Ryan and I are doing experiments with ASICs, and that's why I say, we did the funding first before Templeton. But really what I just described is just a fund of the future. Like, there was a point in time when people would say, like, I have been called crazy for doing forecasts of ETFs. I think I said they might be $8 billion by 2018, and people called me crazy. I think they're 800 billion. So yeah, I was wrong. We most always are wrong, but I got it so far wrong the other way, and I was being called crazy because my number was too high. And I think that's what you're seeing now is, people like ASIC will really bring the market, and what I described earlier will just be a fund.
It's sort of bringing in the conversation to familiar sort of environments again, John. I think Venmo in the US made an announcement yesterday, as did Stripe in the last week or so, PayPal, MasterCard, Visa, all these businesses recognise the disruption of the technology to their respective businesses. Put to one side whether you think there's crazy speculation involved in the development of NFTs. The businesses that process payments are petrified about the processing of payments being made more efficient on rails that are being built around them. So it's sort of this top-down conversation with us, which starts with, there's the government conversation, there's the regulatory conversation, and the payments businesses. The noise is bottom up. The noise is NFTs and flippable sort of JPEGs. You kind of go, that's not the issue. The issue is payment processing and payments businesses are being disrupted. That's the reason they're charging you. They ultimately don't care what they're transferring. Their business is the business of transferring value. And so that's why you're seeing those businesses charging. And again, it's in plain sight and it's rarely observed by people in the space.
I might make this the last word because we're out of time, but thanks, Lisa.
If you take a quick look, we get our team to do a list called the shift list every week, and we just document every single one of those shifts. And once you start paying attention, like, you can really see, because it's just happening announcement by announcement by announcement.
Okay, I'm sure that we could keep talking about this for hours, but I'd like you to please put your hands together and thank our panelists for joining us today. And thank you all for coming along.